What's up, everyone? All right, so in this episode, we're going to talk about ABVC. This is the anatomy of a trade. I'm going to go over the trades that I took on it this morning and help kind of slow down everything that happened within a very short period of time. This is a stock where I made over $10,000. You could see my P&L right here. So $10,309.66, and it happens quick. When a stock is moving, all of a sudden, just like that, we've got action. And a big part of day trading really is sitting and being patient. It's a small part of trading that's actually being in the trade. It's kind of a funny thing. We spend a lot of time sitting, waiting, a lot of time studying, a lot of time preparing, and then a very short period of time actually being in the trade. But of course, that's the time that counts. So in the case of ABVC, let's talk about why I traded it, what I liked about it, and of course, my entries and my exits. So first, we could set the stage. This is a stock that had a recent reverse split. You can see the S on the chart right here. Someone asked just the other day on YouTube, Russ, how do you know if it's a reverse split and not a traditional split? Well, you don't usually see traditional stock splits on small cap companies. And if you look at the daily chart and it looks like this, it's most likely a reverse split. A stock that it's going to do a traditional split, well, Apple, for instance. Apple has done traditional splits. There was a split back here, as you could see. This is a chart that just keeps going up. And so, every like 5 years or whatever, they do a split. Tesla's had a split. So it's pretty easy just by looking at the daily chart to see whether or not this is a stock that most likely has done a split going up or a traditional split, or is a reverse split because the chart's going down. So ABVC is a reverse split. What do we know about stocks that do reverse splits? Well, a company does a reverse split because they have an obligation to keep their stock price above $1 a share. And what happens is the price goes up, but the market cap doesn't change. So the only way a stock's price can go up without the market cap changing is if the number of shares outstanding goes down. And so just like a traditional split, in a traditional split, it's the opposite. But in a reverse split, the float goes down. So let's just say, for instance, and well, we can actually check. So ABVC was showing a 20 million share float. But that doesn't reflect the reverse split that just happened yesterday. And it was a 10-to-1 reverse split. So now the float is 20 divided by 10. It's basically a 2 million share float. So the float dropped substantially overnight as the price went up. So you have this trade where float goes down, price goes up. All right, so what we know about that is when we have a stock that's been beaten up for a really long time, and then all of a sudden they have a reverse split, the companies tend to put out news very closely following a reverse split, because now the stock is at a normal price, and all of a sudden with a low float, the stocks can move very quickly. You can have a huge imbalance between supply and demand. And so one of the setups that over the years of my career I've traded and I teach in our Warrior Pro curriculum is the reverse split setup. So the candidate for a reverse split trade is a stock that has done a recent reverse split. It can be within a day, it could be within a month or 2 months, but it's a fairly recent reverse split. The stock should be priced between $2 and $20. That's my typical price range. It should have ideally news, but sometimes they just start squeezing up and you got to jump on that momentum if you want to participate. If you wait for the news, it may just not happen. So if it's squeezing, if it's moving, I jump on and ride the momentum. The relative volume is almost always going to be high. You can see this green candle on the daily chart. This had today over 20 million shares of volume. Let's see, it's 33 million shares of volume today. And yesterday it had 151,000 shares. So the relative volume ratio on this is 1,656. That's crazy. Anything above 5 is good. That would mean it has 5 times higher volume than the previous 14-day average. This has 1,600 times higher than the 14-day average. So that's terrific. Super high volume, good liquidity. And that's really sort of the criteria. So that's in terms of the stock, just period. Now, I like it when we have a lot of room up to the 200 moving average. This one didn't have as much room as I would like. The 200 is at 8. We had one the other day where the 200 was at like $50 and the stock was at $5. So that one had a lot of room up to the 200 moving average. In a situation like this, that would be a little bit better, because then you're like, well, this could actually go up to 22. It's very common that they'll squeeze up towards the 200. So the 200 on this was a little closer than I'd prefer, but not the end of the world. All right, so that's really the only thing I look at on the daily chart. What's the proximity of the 200 moving average? But for the most part, I'm not looking very closely at this could be like a resistance level, because this was when it was a penny stock and it was on such light volume. I don't think it's really significant. Now, if it got above the high of this pivot here, I probably would have looked at this area as possible resistance. And then I would look at this candle, the top of that. You've got a big window there, but we didn't get to those areas. So the stock pops up on the early side this morning. Let's see. And I saw it pop up. I saw it hit the scanners, and I didn't trade it at the time. That was right here. So it goes from 440 up to 520, pulls back, pops to 540, but then rejects, and you've got that red volume bar. And I was like, well, I don't know. It's kind of, I just didn't really like that high volume red candle, so I didn't think much of it. But I did notice at the time that it popped up that it was a recent reverse split, and the price was fine and the float was quite low. So I was like, okay, that's one to keep an eye on. Now this morning, our leading gapper, SIMO, this one was higher priced. I'm not sorting by change from the close. I'm sorting by gap. Higher price, so didn't care about that one. ABVC was our second leading gapper, and there were a couple others here, but they weren't that interesting. So this did end up becoming the most interesting stock. And basically what happened was, all of a sudden right here on this candle, it pops back up to VWAP. It hits a high of 5 right there. It pulls back, and as it broke over 5, that's where I was like, it's time to buy. So I took my first position. I tried to buy at $5. So I saw this little pullback here. I pulled it up. I already had this on watch just because it was a recent reverse split, and I thought it was worth keeping an eye on. And just for reference, BJDX, this was a reverse split set up from 2 days ago. And let me just show you this chart. This one went from $7 to $14 a share. Now, what's funny about this one is I thought it would do it like right here. It halted up, and then it just sort of stalled out and came back down. It was sort of weird that this one made the move at like 12:30 in the afternoon. But in any case, that was just the other day. So reverse splits right now are hot. All right, so ABVC. All right, so ABVC, so as it pops up to 5, I'm like, okay, I want to get in at 5 with a stop at around 490. So generally, this is a setup right around the $0.50 whole dollar, psychological resistance. And in this case, I pressed my buy button, but the moment I pressed it, it was already starting to break over 5, and I got filled at 507. So that was a little bit of a bummer. It was higher than I wanted to fill, but I got filled at 507. It squeezes up to 515, and I added at 520. So now I have a cost basis of like 513 or so. And it squeezes right up to 550 at the $0.50. It then does a micro pullback. I tried to add, I didn't get filled. It breaks that level. And then as it squeezes up to 565 and 575, I added at 575. At that point, looking for the squeeze up to $6. We got it. It went up to a high of 620, and I took profit at 596, 595, and 588. It then dips back down, and I added 2,500 shares at 570. It pops back up to a high of like 590. I took the profit off the table for maybe 10 cents a share. It drops back down again to 575. I added at 575. I added again at 565. So my average was 570. It pops back up to 580 or whatever it was. Got out again with a small winner. It dips again. This time it hits 547. That was right here. And I added at 549, buying right under the $0.50. That was a good trade, but I only filled small size on a 2,000 share order. It was a partial fill. Just is what it is, unfortunately. And I did a couple trades there. So buying these dips, and you know, those were fine, but it kind of felt like this was the big move. And then it just sort of went into this period of consolidation where the winners got smaller and smaller and smaller and smaller. Then we had our opening range, and the high of the opening range here was 566 of this first 1 minute candle. It was sort of struggling, but you know what? There wasn't a single red candle. 2, 4, 6, 8 green candles in a row. And as it squeezed up right here, I got back in. So this was now at the open. So let me zoom up to this trade. So I got back in at 561 and 563. To anticipate the break of 566, this level right here. All right. It squeezes up there to a high of 578. It dips down, then it breaks 78 and squeezes up to 610. Nice. It pulls back, then it pops up here to a high of 643. And then it did something that I thought was kind of interesting. I called it the headless head and shoulders pattern. So it goes up to like 530, 538. And it was sort of sideways, and then it had this kind of nasty sell-off. That was right here. And I was like, that's interesting. It almost looks like a head and shoulders pattern, except there's no head. So the head of a headless head and shoulders pattern, it should have broken here and gone up to like right in this area, and that would be the head. But it kind of just did like shoulder, no head. So a headless man, and then or a woman. Could be any. It doesn't matter. It doesn't matter. It's just headless. It's a headless horse person. Headless horse person. We got to be politically correct. So this is a headless horse person, and it just dips down, and then it flushes. So I was like, that was funny. That was interesting. Then it comes back up here, and when it came back up here, I was like, if this thing breaks 643. We might see a squeeze up to 7. So I added as it approached that level right here. And look at that. We got that nice big green candle, a 30-cent candle, took the profit into that. That put me up over 10,000 on the day. And I didn't trade it. Beyond that, I just said, that's good. That's good enough for me. 10,000 is a great day. That's twice my daily goal. Daily goal is 5,000. Finished just under the daily goal yesterday on AURC, and you guys can check out the anatomy of the trade on that one. This was a little bit of a different setup. It's a special acquisition company. So why don't you guys check out that episode? If you enjoyed this episode, Anatomy of a Trade on ABVC, I hope you hit the thumbs up. I hope you're subscribed to the channel. You can always come over to daytrade-.com or warriortrading.com if you want to check out my tools that I'm using, the scanners and the charts, or if you want to check out my classes. And why don't you guys go ahead and watch the Anatomy of a Trade on AURC coming up next. I think you guys will enjoy that. And I'll remind you guys, as always, that trading is risky and my results are not typical, and there's no guarantee you'll find success. Whether you trade on your own, you learn from me. So manage your risk, take it slow, don't try to blindly follow me or anyone else, and practice in a simulator before you put real money on the line. All right, enjoy that next episode on AURC, the SPAC breakout.